All right, I looked at Strategy Inc. last year around April, I believe it's April 1st when I posted that video. I'll post a link to the comments so you can check it out. I told you that Strategy Inc. was a bad investment. I told you it did not make sense. Since that video, the stock started to go up and a lot of people were in the comments criticizing me, telling me I didn't know what I'm talking about, saying that I'm using traditional finance, but traditional finance is just plain finance. It doesn't really make sense. Then since then, that stock is now down 50% in the past year. Hate to say I told you so. I'm lying. I love to tell you that I told you because I was right. This investment did not make sense. So Strategy Inc. at the time last year, April, when I did the video, it was known as a software analytics company, but they were doing this kind of weird Bitcoin treasury thing. Now they've stated they're forthright with their strategy, saying that they are a Bitcoin treasury company is what they are, which really doesn't make sense. A Bitcoin treasury. So they're saying, yeah, we have this AI company, this software, but we are in existence to buy and hold Bitcoin. Any individual can buy and hold Bitcoin themselves. You don't need a publicly traded entity to buy stock in that company just for them to go out and grab debt, go out and sell shares, bring in more cash just to buy and hold the stock. It doesn't make any sense. You can do it yourself. Get a wallet and buy your Bitcoin. But hey, they say I don't know what I'm talking about. So just look at Strategy Inc. Ticker symbol MSTR. I did the analysis in April around this range. It went up. I was wrong. And then I was right. So down 50% over the past year. This company is not really profitable. They have a PE ratio of 6.6. So that would make you think they're profitable. But we're going to look at the financials a little bit and I'll explain to you why they have a quote unquote profit at the moment. So let's get into the financials. We're not going to waste too much time here. Let's look at their revenues. Again, this is a AI software analytics company. Revenues, $530 million in 2015, 475 for the trailing 12 months. How is an AI company's revenue going down during an AI boom? That right there should tell you not to invest in this company. It told me not to invest in it. From there, it's the boom of the industry and then you're losing money. Pretty much college kids in their dorm are making money with AI, but you're losing money and you have an AI company during an AI boom. Can't say I can trust management. So revenues are going down. Gross margins also going down. 80% in 2015, 70%. So not only are you losing money, it's costing you more to deliver the product to the customer. You're not gaining efficiencies over this past 10-year period during a time where you should be killing the market, but you're not. So that's the first sign. But hey, people say, I don't know what I'm talking about. Let's look at profitability. This is the money you brought in, your revenues. This is your gross profit. Once you deliver the product to the customer, here's what's left over. 429, that's coming down as well. And the margin is coming down. You're spending more money. So for every dollar you bring in, you hold on to 70 cents. Where in the past, you were holding on to 80 cents. Not good. So let's go to profitability. All right. So this company, 106 million in profit, down, a little bit up higher, down, way down, up some more, way down again. And again, software business during the software or AI business, an AI business with a AI software analytic company, and they are losing money every year during the height of the AI boom. The beginning of the AI boom doesn't make sense. Now, earlier I mentioned that they are now a Bitcoin treasury company. So right now they're showing a profit of $7.9 million for the past 12 months. Where is that coming from? You said they're losing money. Yes, the operations of this company, the software company, is losing money. This gain is from the Bitcoin that they're holding. So since they bought Bitcoin and the value of that Bitcoin has risen, they have an unrealized gain of 7.9. So typically if a company is losing 1.1 and they turn around and they're starting making a 7.9 million, you'll see investors starting to flock to them. But we saw the stock price. We saw the stock price continuing to go down because people are not buying that Bitcoin, one, is going to continue to rise because Bitcoin is falling now. So this is one reason why people are leaving. They're like one of the main reasons. And I'll show you when we go to the shares, the second reason why people are fleeing this stock. But typically, if a company is gaining that much revenue in a quick turnaround, because we're talking about through 3 quarters of this year, so Q4 of last year plus the first 3 quarters of this year, 7.9 in the positive. So this is would be a solid trend if it was from operations, but it's not. It's from Bitcoin, and Bitcoin, as we know, is very volatile. So it doesn't make sense that this company, or I should say, it makes sense that they have the 7.9 here because of all the Bitcoin that they bought. But again, investors are not convinced because the price of Bitcoin is not what someone would consider stable. So it's very volatile and falling right now. Free cash flow, they don't have any. Their operations loses money every year since 2020. So that's a no. Balance sheet, because they're not bringing in cash flow, how can they pay off this debt? Now, we said that they were losing money. So how are they buying Bitcoin? With what money? If they're not making money, where's the money coming from to buy the Bitcoin? And debt is one of those sources of cash for them to put into Bitcoin. 2.2 billion in 23, 7.2. So they took out 5 billion in debt to buy Bitcoin, not for operations of the business, not to beef up the software analytics company or section of the company, not their operations, just Bitcoin. That's where this money went to. They don't pay a dividend. Now let's look at the second source of this income. If they're not making it from their operations, they're bringing in debt, and they are selling a crap ton of shares. So we see this massive uptrend, especially for the past 3 years of them selling shares, and definitely this past year. $16 billion of cash coming into the company through selling shares. Now, quick explanation. When a company sells shares, they are bringing in cash. Now, some people may say it's better than going out and getting debt because there's no interest expense. It's just the cash. True for the business entity, but you got to think about the shareholders, since that's who me and you are. We might be people who own shares of this company. If you own shares of this company in 2022, they're bringing in more shares. They're bringing in cash, but they're bringing in more people, more shareholders, which means you're diluted. You own less of the company. The company doesn't really change. It's just that they bring in more shareholders. So if there were earnings, your earnings per share is going to drop compared to what it would be if this remained flat, but it's not. Then this spike here. So this is why, the second reason why lots of shareholders are fleeing. Bitcoin is falling and they are diluting the heck out of the existing shareholders by bringing in more cash like this. So you always have to watch out for the share trend. If this line was down at the same rate, they would be adding tremendous value to the shareholders. But as you see, they're ripping a lot of that value away because they are diluting the shareholders. Now, I personally don't think this company is that valuable. Like, your shares are being diluted, but it's not quality shares to begin with. I like to look at the operations and see how much value are they creating. Strategy is losing value off of operations. They're returning 5.6 on their capital, but it costs them 8.9 to hold on to that cash, to have that capital. That's interest expense and opportunity costs comparing to what they could get if they were to invest that money into the market or invest in bonds. Look, 8.9. So they're losing value of about 3.2% per year. They're not successful in their operations to do this. So if a company is not successful making money with their operations, and they're like this for a long period of time, that is management that you can't trust. Why would you trust any type of Bitcoin strategy that they came up with when you could just buy Bitcoin yourself? You don't need Michael Saylor and this management team, if you can call them that, a strategy. They're not necessary. Now let's look at the cash flow, and we can see clearly where that cash is coming from. So if those who don't understand, the cash flow statement is showing you the ins and out of actual hard cash in the business. It's more reliable than the income statement because there's some judgment there. A quick example, if I have products that I'm going to ship to a customer, it may not be due till January 15th, but I can hurry up and ship those products before December 31st. I earned that revenue. I have not collected the cash, but I can record that revenue on my books because I shipped the product. So revenue and income can be manipulated a little bit. Much harder to do it with the cash flow statement. So I like the cash flow statement. My financial statement audit career, this was a statement that I was started off on. I had to do these by hand to make sure the client wasn't plugging numbers. If they were, it was going to flush out in the cash flow statement. This is very important. And here's why, because you have your income statement and you have your balance sheet. Notice the first line. It starts with the last line of the income statement and it ends with your cash at the end of the period. For all the ins and outs of your business or all the activities, how much income did you earn and what does that mean for your cash balance? So it links the income statement and the balance sheet. This is why this is a very important statement. And these lines that I have highlighted are the financing activities. How do you finance the company? Either through debt or through equity. So we see 5.6 million in debt. That's how much money came into the company that they owe in some form or fashion in the future. 5.6. 16.3 is how much they brought in through share dilution, bringing in, authorizing more shares, selling them to the public and bringing in more cash that way, diluting the shareholders. $16.3 billion. For reference, they have about 38 million on their balance sheet at the end of the year. As we see right here, 39. So 39 million on their balance sheet, but they brought in $16.3 billion. That's how much weaker the existing shares are. It's an extreme amount for this size of the company. And when you look at what they're doing with it, it doesn't really make sense as far as a solid investment. Now, again, if you want Bitcoin, if you believe in Bitcoin, you don't need Michael Saylor to benefit from Bitcoin. Get a digital wallet, buy Bitcoin, hold it yourself. It's not like you're buying Bitcoin and Michael Saylor is holding it for you. You're buying a share of Strategy Inc. Michael Saylor is taking that cash and buying it. It's in the name of Strategy, this business. You own shares of that business, but this business is betting on the price of Bitcoin going up. They're not betting on operations. They're not betting on capital allocation and management decisions to produce a profitable software analytics company, or I should say analytics software, AI-driven company. That's not what they're doing. They're pretty much forsaking that strategy based on the financials because the revenues are going down and the AI boom doesn't make sense. So it looks like they're not really pushing that as much and kind of just betting on a business that is just not really a business, just going to hold Bitcoin and just sit and hope that the price goes up as many Bitcoin and crypto enthusiasts believe it will in the long term, which I understand, but there's no reason to do it through Strategy. Just buy the Bitcoin yourself, please. Don't put yourself to or expose yourself to more risk. Bitcoin is already volatile. To buy this company just to hope he doesn't dilute you more, he's clearly going to, because where else is he going to get more cash? He has to take out more debt. He has to sell more shares. There's no money coming through operations. So it's not that I'm not the biggest Bitcoin fan or crypto fan, but this isn't even about the digital asset. If you want to own Bitcoin, own it. It's fine. But don't put yourself in a position where Michael Saylor is simply diluting you because you have so much more risk. It's not just the risk of Bitcoin. It's the risk of owning less and less and less of this company as the value continues to go down and as they continue to sell shares. At the end of the day, what are you going to have with a share of this company? You can't define that right now. It doesn't make any sense because you don't know we don't know what's going to happen in the future, but you don't know how many more shares, how much more debt he plans on bringing on just to put into Bitcoin, hoping that Bitcoin continues to goes up. If it doesn't, this company is going to do what it should have done already, because how do you have a software company, AI driven, that's not profitable? You should close your doors. I think that's what they should be doing, but instead they come up with this strategy and selling it to you that they're going to buy and hold Bitcoin, and it's a great idea when you can just buy it and hold it yourself. Again, make it make sense, or don't even try, because I don't think you can make sense of it. One thing you got to learn, common sense 9 times out of 10, or 10 times out of 10 is going to save you when it comes to investing. You have to use common sense. Common sense says this is not a good investment. Sometimes we try to outsmart common sense and come up with strategies that we're going to make money. If a company is not making money, Bitcoin is not the savior of any operations that's losing cash. Bitcoin is not for that. It is not the savior to operations that's losing money. Okay, so I want you to keep that in mind. And not very often, even if I don't like an investment, don't like a stock, not very often will I say stay away from it. But this is one of those times where, in my opinion, it shouldn't be touched. It's not a smart place to put your money. There's plenty of stocks that are cash flowing, whether they're overvalued or not right now. So many assets are overvalued, but there's so many good companies to invest in. This bet doesn't make sense. Again, just buy Bitcoin yourself and you'll be fine with that. So hope you enjoyed this analysis. Again, I believe I was right. I mean, I showed you the numbers, showed you where the cash is coming from. It's not coming from operations. So you may not agree with me, but one thing you can't say is that my assessment does not make sense. It's a common sense assessment, fundamentals first, then we'll look at the story and all the bells and whistles after that. The only thing is, when you do that first, when you look at the bells and whistles, then you look at the numbers, sometimes you can force yourself to see what you want to see. But I'm a numbers guy first. Let me look at the numbers first and see if they make sense. Then let me hear the story and go from there. So I hope this analysis was helpful to the common sense investors out there. Stay away from Strategy Inc. Doesn't make sense. See you in the next video.